Welcome traders to another episode of T2 SMC Trader. Here, this video is going to be about weekly analysis. So top-down analysis actually, and we will do gold and Nasdaq weekly analysis over here. If you can know how to do the top-down analysis, it will be easier for you to identify the narrative as well as the daily bias, then the lower time frame direction as well. So if you do the weekly analysis perfectly, then it's going to be easier for you to trade. By the same time, you don't need to be very specific or very bright by the weekly analysis. Sometimes you can be wrong. There's nothing wrong, because to be honest, it's all about your overconfidence. So if you can do the weekly analysis in a perfect way, and if you are right in that type of situation, in a lower time frame when you will execute your trade around 1 minute chart, you will be very confident about your execution. But at the same time, if you are wrong about your weekly analysis, I believe that you will be able to trade as well, but it's gonna be little less confident. Okay, so make sure that you have done your weekly analysis, and day by day we will improve. That is my belief. So let's go to the video. Before going to the video, make sure that you have given the thumbs up and subscribe to my channel if you are new. This is Forex calendar. I'm gonna start my weekly analysis from Forex calendar. And as you can see, in Monday we don't have any news. So in Monday it's gonna be choppy in my opinion. Then Tuesday and Wednesday we have Fed Chair Powell speak around 10 a.m. Fed Chair Powell is actually a news which makes the market choppy most of the time. So I really don't like to trade around that days. Then Thursday we have CPI, and Friday we have PPI. So these today, Thursday and Friday in this week is gonna be very beautiful for trading in my opinion. But Monday, Tuesday and Wednesday we should avoid trading. Now if you are that kind of people who would love to trade every single day, brother, I will tell you, don't stop. Stop thinking like that way. Every day is not for trading, and make sure that you are not thinking the same way I am telling over here. You are not just going to take entry every single day. It's not the way to trade. Instead of that, go for the high probability and make sure that your profit is secured over there. So in my opinion, this week, from Thursday and Friday, it's gonna be beautiful, and Monday, Tuesday, Wednesday, it's gonna be very difficult market. Though I will be there for my live streaming, uh, but at the same time, make sure that you are not over jealous and you are not forcing yourself to trade around that days. After the Forex calendar, I would love to go to the dollar index, because this is the barometer for me to think where market is actually going for Nasdaq and gold. So I will use this dollar index weekly chart for the first time. Here you can see I had this buy side liquidity from weekly chart and that sell side liquidity from weekly chart. Last week I was expecting that market will reverse from this weekly bullish fair value gap, then it will go and take the buy side liquidity. I was absolutely wrong, though it reached until that area, that bullish fair value gap, but it never reversed and it did never take the buy side liquidity. If you ask me why it happened, I will simply say that last week was the NFP week, that is non-farm payroll week. That week are really difficult to trade. That's why, and also we had 2 holidays last week, so it was a little different. This week I'm also thinking the same, that market is going for that buy side liquidity. So my expectation is it's gonna be the fake breakout. One candle closed below this fair value gap, the very next candle will go toward that buy side liquidity. That is my primarily that is my expectation. At the same time, I will see this sell side liquidity as well. If I see depending on the narrative, if I see that market is actually going toward that sell side liquidity, maybe I will go for that sell side liquidity. So here I'm just telling you 2 probable things. The first probable thing is market will reverse and it will go for that buy side liquidity. The second probable thing is market will go toward that sell side liquidity. It will all depend on Monday and Tuesday, because CPI is sorry, not Monday and Tuesday. It will be depend on Tuesday and Wednesday, because we have the CPI in Thursday. So Thursday run will go toward either the buy side liquidity or the sell side liquidity. If we wait until Thursday, I believe that we will be able to catch a huge run in Thursday. After the weekly chart, if I come to the daily chart, all you can see is market actually came here to that area. This is the bullish order block, and it reached until the min threshold, not tick by tick, but at the same time it reached until the bullish order block from hourly chart, daily chart. Okay, so if you just mark the 50% of that bullish candle, bearish candle, you will see that this is the min threshold of that bearish candle. I'm believing that after trading this order block, market will reverse again and it will go for this buy side liquidity and then that buy side liquidity by this week. If market is overzealous, obviously it can go for that sell side liquidity, but in that type of situation, it will be difficult for me to frame the sell setup. So that's why I told if we would just wait until Thursday, it's gonna be easier. First, let market decide where it wants to go. Right now, it is in the middle of the range. So if you just say this is your buy side liquidity, so let me mark it. This is the buy side liquidity, this is the sell side liquidity, okay? And if you can see, market is at the equilibrium area. So this is the 50% of that range. Market is at the equilibrium. Yeah, it went little below that equilibrium. And in my opinion, if you just look this buy side liquidity and that buy side liquidity, it is also at the equilibrium. So in both of those case, market has to actually at first market has to decide where it wants to go, then we will participate in that price action. If you come to this hourly chart and you can see that this bullish fabric from weekly chart was trying to hold the price, then finally it break that bullish fabric, came here, failed to go below that low. If it is really would love to go higher now, it has to give me the market structure shift above that high. And if it would love to keep going lower, as I told from the higher time frame, I need more and more confirmation that market is actually going for that sell side liquidity. So for me, if it started to go high for the buy side liquidity for all of these relatively equal highs and that high, it will be easier for me to frame the buy setup. But it will be difficult for me to frame the sell setup. Now I would love to go to gold first, then I will go to Nasdaq. So here is the gold chart, and if you take a closer look over here from the weekly chart, this all the sell side liquidity, that was my target for the last week. I was absolutely wrong over here. Market went higher. Instead of falling, market went higher perfectly. Now, if you take a look over here, I had this all-time high. At the same time, this is the obvious liquidity, so buy side liquidity. So looking at this area, it seems like that market is going for that buy side liquidity over there. At the same time, I would love to remind you about the dollar index. If dollar index willing to fall, keep falling for those sell side liquidity, then it is obvious for gold to take that buy side liquidity from weekly chart. Right now, I'm just thinking this order block, this is the highest up close body close candle. I'm just watching this one. If it can hold the price, send it back for that sell side liquidity, I'll be very happy to see that. And I really would love to see market will fall, keep falling, and it will take that sell side liquidity. Because if it would love to start to fall, then there is nothing that can stop the price. At the same time, if it keep going higher and dollar index has given me the confirmation that it is going to fall to take that sell side liquidity, yeah, I'm bullish for the gold for all-time high. Let's go to a daily chart. So from daily chart, all you can see, this is that same sell side liquidity from weekly chart. This is the buy side liquidity from all-time high, around the all-time high. Right now, market is trading this entry fair gap. Okay, so this was the first time where market closed above the constant crossment of that bearish entry fair gap. This is the second time when it has closed above the constant crossment. For me, the fall is little low probable now. Okay, it's now low probable, at least from this entry fair gap. But above that entry fair gap, you have the last fair gap as well. So look over here, this is the last fair gap. It can simply tap with this last fair gap, can work with the lower portion of that last fair gap, then it can fall for this sell side liquidity. Look at this very clean, relatively equal lows, that support zone. Okay, so it can easily go little higher, then it can fall for this sell side liquidity. It is more probable, very easy to frame, but at the same time, if it would love to keep going higher, there is nothing wrong, and I believe that we'll be able to catch the buy move for the buy side liquidity. Again, for setting up the sell setup is much more easier for me comparing the buy setup. If I go to hourly chart, you can see from hourly chart, it has taken this low. This low has taken by that run, and this run had traded this order block. See this order block, it has traded that order block, then it went higher. Definitely it was a very nice run, but when market went higher, look over here, I have some relatively equal lows. Below this relatively equal lows, I have this so clean equal lows around that area. So all of this sell side liquidity is also my in my mind that it can go for that sell liquidity. If I see that market is actually keep going higher, then this last fair value gap from hourly chart can hold the price, send it back for the sell side liquidity. If it is broken, then I'll go over sure that market is going for that buy side liquidity, the all-time high one more time. Okay, so until this fair value gap is not broken, I am not so confident about the bull run. But if this last fair value gap from hourly chart is broken, at the same time, there was your last fair value gap from the daily chart, then if it is broken, I'm pretty much sure that market is going to take that buy side liquidity. Until then, I really would love to frame some kind of sell setup, as I have a lot of sell side liquidity around that area, which market left without taking. Now let's go to Nasdaq, and here is my weekly chart from Nasdaq, and all you can see a perfect expansion. Okay, so this is a perfect expansion last week. I really wanted to see, as the same way I was looking for sell for the gold and gold and Nasdaq last week. I was looking for sell, but it didn't fall. Instead of that, it went higher perfectly. Remember this minus 2.5 standard deviation from the monthly chart. So let me show you one more time. The guys who has missed this thing, I would love to mark it for them. Okay, so this is the retracement leg. I marked the lowest body and highest body, and marked this one. First target was minus 1.5, last target is minus 2.5. So even if market would love to fall, then it can fall from minus 2.5 standard deviation. So I am thinking that this week market is going to tap to this minus 2.5 standard deviation. Then I will see if it can fall. So first target is minus 2.5. Then I will expect at least some kind of reaction from that minus 2.5 standard deviation. If it keep going higher, maybe it can go for that minus 3 standard deviation. We will see that later. But from our weekly chart, it's so obvious that market is going higher at least until that minus 2.5 standard deviation at first. If I see market is falling actually, instead of going higher, maybe I'll be able to frame some setup, but it all will depend until the CPI, around the CPI time. So CPI run will confirm my bias. If you come here in daily chart, you can see that market perfectly worked with this entry fair value gap. This is the last fair value gap. This is the entry fair value gap. Market tap to this entry fair value gap. Then this is the order block, bullish order block. If you just mark the order block and the mid threshold of that order block, you will see perfectly it has traded that order block. Then it went higher. Now, at the same time, I'm just thinking the same thing from weekly chart, that market is actually reaching for minus 2.5 standard deviation. If it is start to fall, maybe it can use any of this parabolic gap, though I really don't want to see that market will reach until this parabolic gap. So this parabolic gap, I really don't want to see market will reach over there before tapping to that minus 2.5 standard deviation. But if dollar index is actually extremely bullish, then it can actually fall, and it doesn't need to tap to this minus 2.5 standard deviation right now. Instead of that, it can keep falling. I really don't want to see that. No falling, I really would love to see before tapping to that minus 2.5 standard deviation. Let's go to hourly chart, and from hourly chart you can see market perfectly went higher. There is actually nothing to say because that was really so nice trending run, the way it went higher perfectly. Now it can work with this parabolic gap, or maybe lower, it can fall little lower, then it can reverse again, or it can keep going higher until minus 2.5 standard deviation. When it will reach over there, I will start to look for sell. That is my first expectation. But at the same time, if it can keep falling, maybe if it can go below that low with displacement, then maybe in that type of situation I will look for some kind of sell side liquidity, because I have a lot of sell side liquidity around that area. So this is sell side liquidity, that is sell side liquidity. It can go for that, those sell side liquidity as well. But we will see. Really, I really don't want to see that this week market will fall until the sell side liquidity, but it is also possible because we have the CPI. So CPI is the most dangerous news, and obviously market can fall until that area by using the CPI news. My first target is minus 2.5 standard deviation. I really would love to see that market will reach until that area. So until that line, market will keep going higher. So remember, it's 2806.50. Until that area, market will keep going higher. Then it can give me some kind of reaction from that minus 2.5 standard deviation. So that's all for this week analysis. It's a very small analysis video, as I really don't have anything, because it's a probability like 50-50. Okay, anything can happen. It can go for the buy side liquidity, it can go for the sell side liquidity. As we have the Fed chair Powell in Tuesday and Wednesday, I really would love to wait for them to make the enough damage to the market, and then around Thursday when I will get the CPI news, it will confirm my bias, and then I will be able to trade. That is my belief. Okay, so until the next weekly analysis video, cheers guys.